from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone. From Chicago, it's Thursday, October 1st, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We're glad you're here with us. From COVID to clarity, this is CB3 Live, and we have a great show for you tonight. So much to talk about. Corona America, awaiting the vaccines as the cases increase. Stocks begin a strong fourth quarter, really like today's action, and then debating the debate. The political section will be a little bit longer than normal tonight, and that actually might last through the rest of the political season. This chart that we keep looking at, we're 4 times now have shown you that we have less than 1,000 deaths. Obviously, any death, as I say every week, is one too many. But as we see the cases rising, the testing increasing, and the deaths staying under 1,000 per day worldwide, we are making progress. This is one of the most important charts you're going to see tonight. You're not going to see this in the news or anywhere else. This is buried in the CDC data. The COVID survival rate. Survival means you're still breathing. It doesn't mean that you haven't gone to the hospital, but you haven't experienced really bad symptoms, that it knocks you out for 5 to 6 weeks. It just means you're still breathing. Ages 0 to 19, 99.997% of cases recover. You can see the rest of the data for yourself. But the 70-plus data is what really interests me. 94.6. Yeah, that's a big drop from 99.5 for those in my age group, 50 to 69. But 94.6 is not what it sounds like when you listen to the media. The survival rate is actually amazingly high. Still, we need to be careful. President Trump has announced massive testing expansion. More than half the European Union has done this, as well as Latin America. But President Trump announcing 150 million rapid means 15 minutes, you get your results. Test just in the coming weeks. We'll see if it happens before the election. I believe it will. Going to more than double the capacity and the number of tests that we've had so far in the U.S. The president also said 50 million of these tests will go for the most vulnerable. 18 million to nursing homes, 15 million assisted living, 10 million home and health, and then nearly 1 million for historically black colleges and universities. All of this is really good news. The European Medicines Agency, this was a new thing to me this week, has got their first rolling review of AstraZeneca and the University of Oxford's candidate. I can't even pronounce this. We're just going to call it the alphabet vaccine, okay? But they're in their first batch of study. You know, I was trying to come up with an analogy here, but what this is like is, so when I was a kid, I would come in with my friends and we'd just been playing all afternoon, and mom was fixing a pizza, and it's like, we don't care if it's done. We just want the pizza now. Well, you can't just eat dough. Well, we don't care. We're starved. And I don't mean to make light of this, because certainly this is a more serious situation than eating a pizza, but we just have to wait until all this data comes in. One bit of data that I got this week from the World Health Organization, which is not a group that I have a whole lot of faith in, but South Korea has really managed this well. I think a lot of this is because they had the SARS experience a couple decades ago, so they really were better prepared to handle a pandemic than we were in the U.S. And their philosophy is you don't need to want it or need it. which of course we all want it and need it. You simply needed to modify your behavior and get on with your life. And that's been their approach. You can see the results here. Japan and South Korea have hardly had any rise of a so-called second wave, whereas it's just been a true pandemic in the U.S. A whole lot of this, I believe, is simply because people are not staying with their masks on. They're getting back in groups. These college kids, even in the NFL, you see, I mean, it's a situation where people just have to stay distant, and we may not be able to continue with sports until this gets figured out. Moderna, I've been talking a lot about them. Their phase 1 study is showing, that it's well tolerated. It's a pretty severe dose. I mean, it's a pretty severe chemical change inside the body, but it's a strong immune response in older adults. And if you look at the bottom here, the last paragraph, it's reassuring because our immune systems tend to weaken as we age. And of course, being in my middle 60s, this is something that concerns me very much. But this is another promising result. And then there are the smaller vaccine developers, Novavax, Sanofi, GlaxoSmithKline, catching up with the big leaders that I've been talking about, especially the last 5 to 6 weeks. Eli Lilly. There's just literally a race to see who is going to come to the finish line. And as I've said, really for the last 3 months, I think there are going to be several. And I think that when there'll be specialties, so that depending on your ethnicity or your age bracket, you'll be more appropriately given a vaccine that's suitable for you. Some people will choose not to do it, or they'll, choose to defer. So along this lines, we've asked business owners, or at least they have been asked, I should say, I didn't run this survey, when do you anticipate business returning to normal? Well, a fifth of them say it's already back to normal. I think that's a pretty good number for a 7-month pandemic. And then the number at the end is the one that really I noticed the most. Only 4% say never. I mean, candidly, we have 10 to 12% bankruptcies on new businesses every year anyway. Not a number that we are real happy about, but I would have expected this number to be larger, especially with the survey that was just taken 2 days ago. And to follow up on this, what percentage of your workforce is working from home? Again, look at the data on either end. 100% of the businesses surveyed have at least 1/4 of their workforce working from home. I find that a staggering number. And what percentage do you have that are working away? Well, 53% have at least some people working away. I mean, it's just, it's just an amazing number. And it's going to change how business is done in America. It really is. So, all right, here's our first question for tonight. And we have a couple extra questions, okay, especially when we get into the political section. What do you think of the U.S.'s response to the COVID-19 pandemic? Answer A. Well, it's been as good as possible given the nature and intensity of the pandemic. Answer B, it's been okay, but fell short of South Korea, who we just talked about, and other nations' responses. C, it was incompetently handled at some, but not all levels of government. And D, it was incompetently handled at all levels of government. While you guys are answering this, and I'm letting you catch up to the 25-second delay, I'll check the numbers here and see what we've got in the comments. Hey, Kay. Good to see you. All right, waiting for your answers, guys. Happy fourth quarter to you all. It's hard to believe we're already here on October 1st. 5 episodes this month, at least the way it looks like right now. All right. Mark, hey, Mark, how are you? Good to see you, sir. And Keith, both A, good as possible. Tom, we got an A. Nelly, A. Looks like that's the popular answer. Dr. J, good to see you, sir. Incompetently handled at some, but not all levels. Same with Greg. Got more A's. Hey, Martha from Michigan. Didn't see you sign in there. All right, guys, that's good. Good answers. Yeah, we'll find out more as time goes on, okay? That's how it's going to shake out. Let's look at the economy. Lots of good stuff going on here. The NASDAQ, man, getting right back to where it was. 26.2 for the year. S&P seriously trailing at 0.5. Dow back to negative on the year. Russell only single digit negative, but still negative. And guys, I just got to tell you this. I had a literally career lifetime high. 30 years I've been doing this. CG, and if you're watching this and you're one of our clients, 100% of our clients have a CG account. As of this afternoon, beating the S&P 500 by 35.7%, which is 3,570 basis points. I wish I could attribute this to genius, but it's not. It would be great for my ego if that were the case, but it's not, folks. The reason that we have this kind of outperformance is because I practice what I preach. When I see the data, it gives me the courage to hang in there with my own money and with your money too. I'm letting the data direct how I make decisions for your and our family portfolios. And that's really all it is. It's just a discipline thing. Because we're in good companies, we're just not letting the market and the news and the media scare us out of these, okay? So where is this contribution coming from? You've seen this really going all the way back to April. Infotech, consumer discretionary, a little bit in industrials, but communication services. About 85% of our holdings, and I've shown you that graph in previous episodes, are in infotech, consumer discretionary, and communication services. We just beefed up, for all of you DG account holders, beefed up industrials by 6% there. And then the rest of the sectors really aren't doing much. Look at energy just getting wiped out. It's just amazing. Now, we always try to have some of the flying high stocks, but look at the S&P here. It's the orange line way at the bottom. Novavax. Now, these are, biotech companies, obviously. Vaxart, Overstock, Zoom, Tesla, Nikola. We've got two of these holdings, but, even as courageous as I am sometimes, I don't have any more than two. We are looking at Nikola, but, there are still tremendous outperformance opportunities in this market, even though we are still technically in a recession and technically, certainly still in the pandemic. This is a datum that I have not shown you before. This is the 10-year note yield. And why am I showing you this spike? Because the way new money comes into the market is it either has to come off the sidelines from either individual investors or institutions that, quote, were scared out of the market back in March, and they're now bringing it back in, sitting there in cash, or they're rotating from their bond holdings and taking that money and putting it in equities. And that's what I think's going on here. That's what I think's happened these last few days with this big bump. So what you're seeing here is the yields rising in the 10-year bond. And then why does that happen? Because the prices are going down, because people are selling to put the money in equities. So it's catching on. And fortunately, we've been here all along. All right. So the forecast for unemployment today, again, this is the weekly unemployment number. We get the full non-farm payroll tomorrow, and this is that one Thursday every month when I just wish I could do this one day later, because we're expecting some more really good data. It will be the last data before the election on monthly employment, and it'll be real interesting to see what that is. Probably won't do a video, but I'll be tweeting tomorrow, so you guys follow me there. But this forecast was at 850, came in at 780, so a big improvement on that. More good data this week has been ISM manufacturing. Checked in at 55.4. The consensus had been 56, so just a tiny bit under, but the August number was revised up. The key takeaway from the report, you can see at the bottom, is that even though we had a really sharp sell-off from April to May, this index has gotten stronger and continues to be. Look at the 41.5 versus that 55.4. Those are big percentage changes over just a matter of months. And you've seen this nowhere more clearly than in the housing sector. Residential housing construction spending increased 1.4%. Not a huge number, but the consensus was only 0.8. The key takeaway on this report is that total construction spending, despite the economic challenges, still posing a 2.5 year-over-year gain. Now, this is not coming back from the low. This is a gain over 2019. It's a great piece of data. I've shown you these before. These just continue to blow me away. The daily shot here, where it goes back and looks at new family homes, one family homes, I should say, sales. Look at this blue bar. That's 2020. Just killing previous years, and we want to see this bar go higher. So why did it flatline? Well, it flatlined because of this chart. There's no inventory. If you want to buy a house right now, I have 2 of our 6 children that are looking for homes right now, and they're scratching their heads. It's hard to find them. I talked to a realtor in Franklin, Tennessee, which is a suburb of Nashville, and she said, you know, I just sold a house. We had 11 bids. Now, 6 of the 11 pulled out when they realized they weren't going to be paying over the list price, but 5 bidders stayed in bidding over the list price. I mean, that's the situation we have in America right now, in a pandemic, in a recession. And of course, a lot of this is because of low rates with the feds. So are we worried about inflation? Well, there are some items that are getting more expensive. Bicycles, no surprise there. People are going out, they're getting exercise is a good thing, getting healthier. Medical care, newspapers, staying at home reading. These are all items that are getting pricier because the demand is going up. But at the same time, you know, food or work at school, not at, you know, exactly a big growing area. Shoes, city transport, hotels. I mean, all these are just taking it on the chin. Airline fares. So you have inflation in some areas. You have deflation in other areas. And when you average it out, we really aren't seeing a significant inflation problem at all, which is why the Fed can say with a lot of confidence, we're not raising rates until 2023 at the earliest. Folks, that means 21 and 22. The next 2 years, it's almost like, why are you guys even meeting? Well, we'll get around to that another time. But so how about this recovery, the payroll jobs? We know there have been tons of jobs lost. How are we on track for getting back to where we were employment-wise versus other downturns? Well, look at the 2007 downturn. You might say, well, you know, it wasn't really a downturn. It was the downturn in 2008 and 9. Well, that's true, but it started in 7. And look at 2001, 1990, 1981. You can see the dips were not nearly as bad as this pandemic dip, but we already knew that. But you're seeing the recovery trajectory more steep, and it's a positive versus those previous pandemics, not pandemics, previous recessions. So we'll be watching this to see how it plays out, but I'm real encouraged about the trajectory, or the V shape of the recovery of job losses. August pending home sales, got a bump there. The prior month revised. I mean, I give you guys all this data. I know you can always go back and watch the video again if you really want to drill in on it, but the plus signs are what you need to focus on. We're just seeing great plus sign numbers here. Now, this is kind of a different factoid for you, but we keep talking about the big box houses, and especially Amazon just taking over. This surprised me this week. Walmart Plus. I don't have a Walmart Plus account, but I guess I'm one of the few people in the world that doesn't. This research firm said that 11% of Americans have subscribed to this plan, which is, you know, unlimited deliveries, and 35% are excited about it being offered in their area. So I realize Walmart's a mega company, but as far as Amazon taking over this whole area of home delivery and last mile, it's not happening. Amazon is definitely a player here, and you will see some significant competition from them, I'm sure. I keep having my headset fall out here, guys. Sorry about that. All right, here we go. So existing home sales, I'm showing this just because I like the 30% higher than 2007. The slide's kind of out of order, guys. It should have been earlier in the show, but there's so much data. One of the people that views the show said, how do you keep up with all this data? Well, usually until about 5 minutes before the show, I'm still processing it. But you can see the 2007 peak, and you know, we're way above that trajectory-wise if we keep going in this direction. And again, one of the reasons we are is because the Fed just continues to help us. So the sale of median homes, I wanted to contrast this with the previous recession. So you see in 2001, home sales did rise a little bit in that recession. But look at 2008 and 9, straight down. Well, it's been anything but straight down in this, quote, recession. And that's a great datum that we're still buying homes, even though technically, and we may not be this time next month, because we'll have data then on the first quarter GDP, or pardon me, second quarter GDP. Third quarter GDP, I'll get it, guys. A lot of data here. All right, so what about our equity? What about our equity in our homes? Are we borrowing like crazy? Are we super leveraged? It's not what the data says. And this is from CoreLogic, a really reputable firm. The amount of equity we have in our homes continues to rise even here in 2020. I like seeing that. Household net worth continuing to rise. Yes, there's that little blip at the top. If you can't see it, you got to lean in. But even here, this is only second quarter. We don't have third quarter data yet on this, but still really positive. Manufacturing new orders. You've seen charts that look like this, although I've never shown you the new orders here. This is capital goods excluding aircraft, because obviously that would taint this graph a lot. Aircraft sales, not a great time to be in Boeing right now or any others like that. But other capital goods here, really, really strong recovery, even in the midst of this recession. Now, I've shown you this. I started with New York. Do you remember, those of you that watch every week, which I know is all of you? I made the joke about the Empire Strikes Back, and the Empire State, is continuing to raise its productivity. Well, this is Richmond, Virginia, and they too have a very similar graph. They're back to 2018 levels in their manufacturing index, and Dallas is actually now exceeded 2018 and encroaching back on 2017. So these big V-shaped recoveries here are really exciting to me. I'm just seeing it all around America. It's not pockets of America. It's all around America that we're seeing this really strong recovery. Household net worth, notice the huge drop in the first quarter and second quarter. And then this red line is the expectation of GDP, or of net worth, in the third quarter. Of course, we'll be getting all this data later this month. But it's just amazing. The bounce back in all aspects of American life, really. And again, you don't hear this on the news. Now, I wanted to point this out because this is an IPO that's not really an IPO. So you would think, and I keep saying over and over again, in a recession, in a pandemic, that nobody would want to put venture capital on the line and bring two new companies out. Well, there have been more than that, but two companies, Asana and Palantir, and both these are data mining companies, and that's a whole nother discussion we'll talk about another time, but these are companies that would not have existed even just 5 years ago or 10 years ago. But they both self-listed on the New York Stock Exchange. And what that means is, if you look at this, a traditional IPO uses an underwriter, and then the underwriter goes out and does a dog and pony show and tries to find investors, and then the first day of trading, the shares are listed. Well, in direct listing, the company just bypasses all that and says, you know what, we think our reputation's strong enough, we're just going to list and let people come on and bid and offer. And that's exactly what they've done. And they both came in about what the projected level would have been. I think you're going to see more of this. I think a significant change in America over the next 2 to 5 years is going to be the minimalization. Let's try that again. The minimizing of the banking sector as an intermediary for all financial transactions. What does that mean? Well, for instance, cryptocurrencies, where transactions can occur from peer to peer, as opposed to having to go through a bank or a credit card company. You're seeing this in this initial public offering. Why am I showing you this? Because it's life as normal for many parts of the U.S. I do realize that there are many parts of America that have been so deeply affected by this pandemic. But I'm trying to give you the encouragement that those in business are trying to come back to normal and introduce new companies and take it live and give people an opportunity to participate in these growing new businesses. In summary, 2020 has seen the quickest bear market sell-off and the quickest counter rally, which started March 23rd and is still in progress. One of the most consequential elections. It's really 5 weeks now. Will we have another virus wave? We're seeing that in parts of the world. We're seeing that in parts of America even. The volatility is going to be here, guys. It's going to stay. So Now, I realize I'm pretty early in the show to get to politics, but there's just so much here. And I just want to say up front, and I've had to deal with this since I've been speaking publicly since 2008. This is my first year of doing video. And by the way, I'm going to be the guest speaker for a company named OnPath Financial. And it's Tuesday night, so I'll actually be Monday night, Tuesday night, and then Thursday night with you guys. But if you want to see that, it'll be different material on Tuesday night. Just shoot an email to Alice, AAB, that's Alpha Alpha Bravo at CB3.com, and she'll get you on that list. I don't know why my headset is so bad tonight, but anyway. So here's where we are with the election. I really don't want to tell you anything necessarily about my own opinions. Many of you know what they are, but I have to address when political positions can affect the markets and our holdings. This is from the Citizen Action USA. They took this survey, and I think if you look at this, you'll see that it's pretty accurate as far as the positions of our candidates. Now, some of these topics were discussed very vitriolically. In the debate that we had on Tuesday night. It really was a shouting match. I don't even think it was a debate. But if you guys come back and do a screenshot on this, compare it. See if you agree with this. See if you think it's not in sync with what you believe about the two candidates. I'm not going to say it. You can't say increased gun control is good or bad. No and yes. It depends on your perspective. But this is a nonpartisan group, and that's what they determine. So what we really are looking at is the two positions of these men. And from my perspective, I got to ask which one is going to bring us the most prosperity as investors. And I thought that would be interesting for you guys as well. And if I can get this video to play. Guys, I'm sorry. What do we got going on?
You're going to have a chance to shape the American economy's future if you're going to the polls in November. That's because your two choices for president, Donald Trump and former Vice President Joe Biden, have much different visions about the path to prosperity. Mr. Trump wants to double down on tax cuts and deregulation.
Our movement is pro-jobs, pro-worker, pro-police, and 100% pro-American.
Joe Biden has a different view. He says he wants to raise taxes on high earners and also restore relationships with economic allies.
Awful lot of hard-working people busted the neck. All they asked for is a shot.
Either one of them also has to manage the country's attempt to rebound from its sharpest economic contraction on record. Here's how the two men stack up on economic policy.
The president and former vice president are most far apart on taxes. While they both say they won't raise tax rates for middle-income households, Joe Biden does want to raise taxes from the wealthy.
The Tax Policy Center says the top 1% of households would see their after-tax income drop 17% under Mr. Biden's plan. But workers on the low end of the pay scale could see new tax credits under Mr. Biden's plan, and that could lessen their burden.
We don't need a tax code that rewards wealth more than it rewards work.
And for President Trump, the approach is less is more.
His 2017 tax cuts for now are set to expire in 2025. If he's reelected, President Trump says he wants to make them permanent. The president has also ordered the Treasury Department to defer collection of Social Security taxes this year. If he's reelected, he wants to make those deferrals permanent too.
No matter who wins this election, the U.S. is in a new era of economic tension with China. But the similarities on trade between Biden and Trump end there.
President Trump imposed tariffs on goods imported from China. They ranged from 7.5% to 25% on more than $350 billion worth of products that Americans consume. President Trump reached a ceasefire with China earlier this year.
Ultimately, it's a great deal for both countries, and it's going to also lead to even a more stable peace throughout the world.
The coronavirus has added a new chill to the bond between the world's two largest economies. That's going to make it hard to reach new deals with America's big economic rival.
The United States wants an open and constructive relationship with China, but achieving that relationship requires us to vigorously defend our national interests.
Mr. Trump has also challenged American allies like Canada, Mexico, and Germany. Biden won't move fast to take those China tariffs away, but he does want to repair alliances with other countries.
Last week, I shared the outlines of my plan to build back better. That plan rejects the defeatist view that automation and globalization mean we can't ensure our future is made in America.
On energy and the environment, the incumbent and his challenger are also worlds apart. And that reflects a much different set of concerns within their own parties.
During his first term, President Trump pulled out of the Paris Agreement to reduce emissions and combat climate change. Instead, the president has prioritized domestic fuel production and sped up approvals of new pipelines and other energy infrastructure. His policies are meant to support jobs in energy-producing regions like the Appalachians and West Texas, places hurt by the recent recession.
We are telling the Washington politicians trying to abolish American energy, don't mess with Texas.
If reelected, the president wants to roll back regulations further. Biden, on the other hand, wants to rejoin the Paris Agreement and make new commitments to reduce U.S. carbon emissions. That includes regulations to cut commercial building emissions by 2030. Biden also has a $2 trillion spending plan to invest in areas like solar and wind power.
When it comes to government spending, if you look at Joe Biden's plans or Donald Trump's track record, you come out with the same conclusion. It's go big or go home.
The Biden plan would result in $5.4 trillion of additional spending over 10 years. That's a fraction of the amount the progressive wing of the Democratic Party wanted, but it's still twice as large as what Hillary Clinton proposed in 2016. Biden's platform calls for increases in spending on education, infrastructure, and housing, in addition to the environment.
I truly believe we have a tremendous opportunity to turn this moment of crisis into a moment of progress.
These spending priorities aren't unusual for a Democrat, but conservative Republicans might need to make peace with Mr. Trump's own spending habits. Under his leadership, federal spending jumped 15% in his first 3 years in office. A lot of that was on defense, but not all of it, and that was before the coronavirus crisis. This year, spending is projected to go to $6.6 trillion. That's more than double the level of federal spending in 2008. With new taxes, federal revenues haven't kept pace with the bills coming due under President Trump. The government has been funding those revenue shortfalls with more and more debt. Additional government borrowing in President Trump's first term is set to exceed $6.5 trillion. That's as much money as the U.S. borrowed between its founding in 1789 and the recession of 2008.
Under either candidate, there's simply no end in sight. But there's good news. Because interest rates are so low, it's actually very cheap to borrow at this moment. Those interest rates and other government financial policies are managed by this institution, the Federal Reserve. And one of the most important relationships that any president has is with the Fed's chair.
Among 12 Fed decision makers, the president appoints the chair and 6 other governors. Their powers are vast, especially in times of emergency. During crises, the Fed lends money to make sure banks and markets don't collapse. President Trump appointed Jerome Powell to be Fed chair. Then the president criticized the Fed leader for not holding interest rates down to promote growth.
There's negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of that money. Our Federal Reserve doesn't let us do it.
If Trump wins, he'll have to decide whether to give Powell another term starting in 2022.
We need to stay in our lane. We do have this grant of independence. I think to keep that, we need to stay with what you've given us to do, which is maximum employment, stable prices, supervise the banks.
Mr. Powell did move aggressively to cushion the economy during the coronavirus crisis, and that won praise from President Trump. But the Fed chair has also asserted his independence from a president who greatly values loyalty. Biden will have the same choice to make about giving Powell another term if he's elected. President Obama and President Clinton, both Democrats, each re-upped Republican chairman for the job after they became president in the name of stability for markets and the economy. Would Mr. Biden follow their lead? And which of these choices is best for your own economic interests? You've got until November 3rd to decide.
Well, it's interesting to me that you see that picture of Bill Clinton there with Alan Greenspan. That's how many years that's been. So I put this quote up there. At first, if you don't succeed, take the tax loss. And the reason I did that is because one of the hottest topics in the debate on Tuesday night was exactly how much income tax did President Trump pay over the last several years. Well, what nobody got around to was that he pays separate personal tax from corporate tax. And it's actually a good thing that we are able to take tax deductions in this country, because look at a Colonel Sanders. Failed 1,009 times before becoming a billionaire with Kentucky Fried Chicken. I mean, it's that sort of tenacity that we need from our innovators in this country. One person asked me this last week, so are you more concerned about communism or socialism? So I actually did this little bit of research, and Dinesh D'Souza, who you may know, put out this very simple definition. Communism is a political system. Socialism is an economic system. And what that means is, obviously, communism believes that power should be concentrated in one very strong central government, which really is more totalitarian than certainly what we have here in the U.S. But socialism is redistribution. It's taking from those at the high end of income and assets, and not just taxing income, but actually taking assets and redistributing. And that's what's in play, at least that's what many on the right think that is in play, with the nature of the Democrat Party, which has gone very, very left. Conference board expectations. Now, you're used to seeing these charts in the financial section, but this is actually showing confidence level at the 2016 time period. And now here we are in 2020. Look at the little red dot. People are still pretty confident now, even though we have this, again, very vitriolic race going on. I would argue that it's even worse now than it was when it was Clinton and Trump 4 years ago. At least it seems like it to me. Every week I'm showing you different states here. Both Colorado and Virginia, I should say, were red states in 2000. George Bush Jr., the younger, won those states, and then both of these states have been progressing to the left, and it's expected that those will probably go for Joe Biden. But we'll keep looking at states here and their migration over the last 20 years from right to left or left to right, which you've seen in earlier episodes. So, what do we think about these debates? It wasn't really a debate to me. It was more like a shouting match. What did Americans think? Well, economic reopening separated men from women. Talk of law and order split the voters by race. This is my take on this. And I know it says Labor Department. Sorry for the typo, guys. We just were inundated with data this week, and it's not the Labor Department. These are my opinions. Men approved of President Trump's calls to reopen business, while women were more skeptical, and independent voters liked Mr. Trump's emphasis on putting Americans back to work, but also former Vice President's promise to rescind the president's tax cuts. I was surprised at that, because so many, in my opinion, have benefited from the tax cuts. But again, perception is different in different parts of the country. So how important are the presidential debates in helping you decide who to vote for? Well, most Americans, if you look back at previous elections, not at all. Although when you go back to the Bush-Gore election of 2000 and then the Bush-Kerry in 2004, that's where the apathy really came in. But as far as extremely important, pretty small numbers. But we're going to get a survey here of us. So, who won the first presidential debate? Trump won the debate is letter A. Gosh, I'm sorry for these typos, guys. Letter B, don't put C. Letter B, Biden won the debate. Letter C, neither Biden nor Trump won the debate. Letter D, the American people lost the debate. Or E, I just had no interest in this. So be careful on this, okay? So A, Trump won. B, that's B, Biden won the debate. C, neither of them won the debate. D, the American people lost the debate. And E, I had no interest in the debate. Okay, so Jimmy, we got a Trump. I'm going to vote D. No, normally I don't vote, but and I see Martha. Yeah, Dinesh D'Souza. I'm a huge fan, as I think you are too. Thanks for saying that. Thanks, Dr. J, on the Wall Street Journal video. The American people lost from Mark Burns, from Nellie. Yeah, I dialogued a little bit with you guys on this. Man. K, D, Martha, A. Oh, hey, Karen, haven't seen you. B, Biden won the debate. Okay. Yeah, so if you guys were following me, I had two of you. I see one of you online, the other one's not. But I was tweeting. I think I sent out 10 or 12 during the course of the debate. And my summation at the end, and I got a little chided on this, was that Biden had what I'll call a soft win, mostly because even though he interrupted, he wasn't quite as strongly interrupting as the president was. And there were some empathetic moments, I thought, with Biden, although there were huge fact issues on his side. But I'm thinking not so much what I thought of, did he convince me to vote for him? No, he did not. But as far as empathy with the American people, I think he probably picked up some points there. We won't know that really until the next debate. But no debate at all from Deb. Hey, Deb, I haven't seen you. Tom, yeah, tried to be interested, but was embarrassed. Agreed with Thomas. Yeah, it was embarrassing. Can't believe some people are still undecided. That's a great line, Doc. It's interesting that I think the undecided vote, Rush Limbaugh said today, oops, I shouldn't have said that. Well, he did anyway, that the undecideds are those just courageous enough not to go out and risk their house being TP'd. Anyway, so, all right. Well, thanks for the answers, guys. That really helps. We're going to have another quiz right away here. So how important will the presidential debates be for helping you to decide? All right. We just saw what other people did, and some of you offered opinions here. And I agree with you, Keith, that people aren't undecided. So for you personally, are the debates extremely important, quite important, just somewhat important, or not at all important? And I hear you, Mark, as far as offended by the name calling by Biden. Yeah, you can't call the president of the United States a clown. He even called him Donald, at one point. That hasn't been mentioned in the press. You just don't do that. You just don't do it, in my opinion. The attacks got really personal on both sides, and there are going to have to be some changes made for sure. So I think we're going to have a bunch of D's here. And my vote is also a D. Here come the D's. This 25-second lag is kind of humorous. From K, we got a D. This might be a perfect score here. Let's see. Let's keep going. Anybody want to challenge that D for not at all? Just entertaining, from Nellie. Oh, gosh. Dr. J got a D. Yeah, I think not at all, guys. I mean, again, it's just not really. And I'm still watching too, Karen. And by the way, next Thursday night, we're going to have to make a decision because I don't want to be, doing my show right up till the beginning of the debate. So we may modify the time, but we'll talk about that together next Thursday night. So the commission, as you probably know, is going to talk about making some changes. Now, the next debate is going to be a town hall format. And I would think that would lead itself a little bit more to, they're not going to bite at each other when they're actually responding to individuals in the audience. We'll see how that goes. So in the middle of all of this, of course, is the Supreme Court nominee. And so, people are saying, well, there's not enough time. This isn't fair. In fact, the House of Representatives today sent a formal letter requesting the Senate defer this nomination, which, of course, is a total joke. They're not going to do that. But the reality is it is a relatively short timeline. Now, as we well know now, Amy Coney Barrett is who President Trump has nominated, and Mitch McConnell is pledging to not only get a nomination in, but the vote done prior to the election day. So, and here's one of the reasons. I mean, this is just something that's in the news just this week. So 2 years ago in Florida, a referendum gave 1.4 million people, completed all their sentencing, parole, and probation, the right to vote. But last year, the GOP legislature said, well, they could cast a ballot, but they can't vote until they've paid all their fines, fees, and restitution. Well, that prompted billionaire Mike Bloomberg, who you know actually ran on the Democrat ticket to try to overcome President Trump. He wanted to be the nominee so he could run against him. Well, he got no traction at all, even after dropping $2 billion. All right. So I think we're going to need to have a Supreme Court because it may come down to this. Now, I showed you this last week. The polls right now are the betting. You know, remember we've got off-track betting here on is this judge going to be appointed and actually sworn into office before November 3rd? Well, from this one source, from Price List, there's a 72-cent bet. So if you wager 72 cents, you can win 28. But then on Predict It, that jumped to 81 cents. So I think that's actually down from 86. Not sure what caused that. But the reality is that this justice, this judge, who's not yet a justice, is going to go through the process, and it's going to affect, in my opinion, what's happening here in the election. And let's just look at how that could happen.
Judge Amy Coney Barrett is President Donald Trump's pick to fill Ruth Bader Ginsburg's seat on the U.S. Supreme Court. He's hoping she'll become the court's all-important 6th conservative vote. If confirmed by the Senate, Barrett, at 48 years old, could shape the high court for decades.
A president has a bigger impact on the court the longer the justice he or she appoints stays in office.
She's long expressed her affinity for the late Justice Antonin Scalia, whom she clerked for in the Supreme Court, and his support for originalism, or interpreting the Constitution according to its original meaning.
Justice Scalia's philosophy of judging was not only right as a matter of the constitutional structure, but it was also self-discipline.
Barrett returned to her alma mater to launch her academic career. She still teaches law at Notre Dame. She became well known in conservative legal circles and spoke to audiences around the country about what the Supreme Court's role should not be when it comes to social change.
When legislative change is slow, because people increasingly see the court as a political institution, when they can't accomplish things in the legislature, they try to litigate it and then declare a fast win through the court because they think it's faster to get it through the justices than to convince their citizens in the legislative process.
She offered as an example the issue of transgender students who were seeking access to the restrooms that match their gender identity. Lawyers for transgender students argued that under a 1972 civil rights law, their clients' rights were being violated. The part of the law prohibiting discrimination in education based on sex is known as Title IX.
It's a who decides question. When Title IX was enacted, it's pretty clear that no one, including the Congress that enacted that statute, would have dreamed of that result at that time. Maybe things have changed so that we should change Title IX, but it does seem to strain the text of the statute to say that Title IX demands it.
In her 2017 appellate court confirmation hearings, Barrett emphasized time and again that a judge's personal opinions shouldn't matter.
I think if I express a personal view on any of these matters, it might give the misimpression that my personal view is what would drive the decision of a case.
No,
it would not be.
I'll stipulate that won't happen.
As for her personal view on landmark Supreme Court rulings, Barrett wouldn't budge, even when those questions came from Republicans who supported her nomination.
What did you think about the opinion?
I wasn't alive when Griswold came down.
Well, what about when you first read it?
Well, gosh, Senator, I think, again, whatever I might have thought about it, I first read it when I was a law student. But whatever I would have thought about it then or whatever I would think about it today wouldn't matter. I would put that aside.
In Griswold v. Connecticut in 1965, the Supreme Court found a state law which prevented married couples from using contraception to be unconstitutional. The court's opinion recognized within the Constitution a right to privacy.
Do you believe there's a right to privacy under the Constitution?
The court has quite clearly held that there is.
And do you agree with the court?
Senator Blumenthal, I would follow all court precedent, and whether I agree or disagree would be beside the point to the discharge of my duties if I were confirmed as a judge.
So you have no personal views on whether there's a right to privacy in the Constitution?
Well, Senator, I think the question is whether I have personal views that would be appropriate to share in this context, given the misimpression it could give litigants who might appear before me if I were confirmed.
Both Democrats and Republicans asked Barrett whether she'd seek to overturn Roe v. Wade.
If confirmed, would you follow Supreme Court precedent involving abortion?
Absolutely, I would.
Do you think Roe v. Wade was correctly decided?
Well, Senator, I'm sorry that I feel like I can't, as a nominee, offer an opinion because I don't want to give the impression that I would treat some precedents as more binding or more valuable than others. I would apply Roe and its progeny just like I would apply all Supreme Court precedent.
The Senate confirmed Barrett to the Seventh Circuit Court of Appeals in Chicago by a vote of 55 to 43. There, she began to establish her judicial record. In 2019, she described an example of how she applied her principles in a case involving Second Amendment rights for felons.
We're surveying all of the arguments, the historically based arguments for the constitutionality of depriving felons of their right to possess firearms, that there was no blanket authorization to just take guns, the right to possess a gun away from someone who had committed a felony.
Progressives worry that Barrett would create a more conservative Supreme Court that could block their aspirations. Barrett has long said she believes the public, through their elected representatives, rather than the courts, should lead the way in social change.
The who decides question, just as a personal matter, is really important to me. And so I guess I worry a lot, about that who decides question about our decisions, or, and my voice kind of getting taken away.
Now Barrett may herself become the one who decides.
It's kind of amazing to see all this happening at the same time, guys. I mean, I've just never seen any time like this in America. I really haven't. So, all right, last question. I told you there'd be some extra ones tonight. We're running just a tad long, but these are important. What are your thoughts? Really simple here. We should wait until after the elections to appoint a new Supreme Court justice. Answer B, we should appoint our new Supreme Court justice now. C, I have no opinion on SCOTUS. That is not a flavor of ice cream. That's an acronym for Supreme Court of the United States. I'm sure you guys know that, right? All right, A, B, or C, real simple. We should wait is A. Letter B, we should appoint our new justice now. C, I have no opinion on SCOTUS. For the record, even the Democrats concede that the Republicans have every right to do so. There's no question on the legality of this. The appropriateness is strictly a discussion that we're having at this moment, like they are across America. Letter B. Can't imagine a better judge, says Martha. B. Okay. Holy cow, lots of B's. All right. And Greg too. Okay. Very good. And K. Guys, I think that's a slam dunk. Maybe not everybody voted A. Okay, we should wait, Doc. All right. Okay. Well, we will see. It's always possible, of course, that she could be nominated and not confirmed until after the election, but prior to, the next president being sworn in. We will, and as the Constitution reads, that's actually the best answer. Thank you, Tom. I should have put that as answer D. So, guys, just reminding you, I've got this link on my homepage now for YouTube. You can go there if you miss any of our episodes. They're right there. Be sure that you guys subscribe. Tell your friends to subscribe. We want to get some more viewers in here. I think we're offering good material. We want to keep you guys in the loop. We want to keep you encouraged and educated. Both are important, okay? Educated, really important, but encouraged, really important. You saw that 35+% return on our accounts. Again, it's not my genius. It's because I've had the tenacity to follow the data and be accountable to you guys as your portfolio manager, those of you that are clients. Be sure to follow us on Twitter. I will probably not tweet during the VP debate, but I will continue my Twittering during the next two presidential debates. And again, we'll talk about that on October 8th as far as how we want to modify the start time of this show, okay? So as I do every week, I give you this data. If you want to reach us, phone number, website, tweeting, LinkedIn, Facebook, we're everywhere. And I always close with this from 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. It is my deeply held belief that we will not only survive this pandemic and this election and this judicial appointment and, combativeness, but we will emerge a stronger nation. And I believe from the bottom of my heart that 2021 will be one of the best years in our nation's history and indeed in our lives. As I mentioned earlier, guys, I'm going to be a guest speaker on Tuesday night. So Monday, I will have the Monday Market Mashup, as I always do on Tuesday. If you're interested in seeing me as a guest speaker for On Path Financial and here in Chicago, you're welcome to tune in on that. It's on Zoom, so a little different procedure, but we'll get you on the list. Just send an email to AAB, that's Alpha Alpha Bravo, AAB at CB3.com. And Alice will get you on the Zoom list. That's our show. It's Thursday, October 1st. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. From COVID to politics to judicial appointments to clarity, this is CB3 Live.